Hey Zeta Army, we're here with an intro to options guide. Whether you are a seasoned trader or someone who's just starting out, this is for everyone. Let's start with the basics. What are options? The textbook definition of an option is probably what you've come across before. It states that options are contracts that allow the buyer of an option to buy or sell the underlying at a predefined price and time. Now let's break that down. Options are bits of paper which let the buyer of a call choose whether they want to buy the underlying asset at a preset strike price at a preset expiry time. This is the same for puts, except instead of buying, the buyer has the right to sell the underlying asset instead. Options have so many use cases that it's impossible to list them all here. Common uses are portfolio hedging, price speculation, or insurance. Everyone can use options, from individuals to seasoned traders. The overall gist of options is explained well by the action at expiry. A call option gives the buyer a choice whether they want to buy an underlying coin at the time of expiry. If the coin is trading below the strike price, they naturally can buy it lower elsewhere and won't exercise. However, if the coin is trading above, they are able to buy it cheaper than on the market and will make an instant profit if they sell the coin they got from exercise straight away. You can see this reflected in payoff diagrams, which are helpful charts that show the profit and loss of an option based on where the underlying coin is at expiry. If you look at the payoff diagram for a call, you can see that it is at 0 at expiry if the coin is below the strike, and begins increasing as the coin increases above the strike price. This is also the same for puts, but the payoff begins increasing as the coin dips below the strike price. You might notice that this payoff diagram is always greater than or equal to 0. This seems almost too good to be true, as the buyer would be guaranteed to never lose if this was the case. This is compensated by the option having a premium or price that is paid from buyer to seller at the time the contract is traded. We can see how the premium is reflected in the payoff diagrams. Okay, with all that in our heads, let's break down a simple use case for options. Zeta Trader 1337 thinks that the price of SOL will go up and has 10,000 USDC in their wallet to express this opinion. They can either choose to buy calls on Solana or buy Solana on the spot market. Say Solana is currently $50 and the 1 month out 50 strike call is trading at $3, which means Zeta Trader 1337 can buy 200 Solana at $50 each, spending 200 times 50, which is $10,000. Or they can buy 200 Solana 50 strike calls at just $3 and spending only 200 times 3, $600. If Solana goes up to $70 at the expiry of the calls, the 200 Solana position will be worth $14,000, making a nice $4,000 profit. The Solana call position will be worth 70 minus 50 strike price times 200, or $4,000. Remember that they paid $600 total premium for the calls, so the total profit is $3,400. On the other hand, if Solana falls to $30, the 200 Solana position will be worth only $6,000, meaning a $4,000 loss for the trader who bought Solana on the spot market. The Solana 50 strike calls will also be worth 0, but this only means a $600 loss for this position. Although the calls make most of the profit when Solana reaches 70, they only lose the value of the premium paid in the case the spot price drops. I think we can all agree that the $600 loss is more desirable than the $4,000. Now let's take an overall look at what we learned in this video. We learned what options are and the definitions for an options contract, what a payoff diagram looks like for calls and puts and why there needs to be a premium component to an option, and lastly, a case study on why options are powerful tools. Thanks for joining us at Zeta Markets for this brief intro to options guide. If you liked this video, please leave us a thumbs up. We look forward to sharing more epic content with you all. And don't forget to join the community for more educationals and awesomeness by subbing to our channel, joining our Discord, and following us on Twitter and Instagram. All the links are down below in the video description. My name's Maz, signing off until next time.